Hello everyone, I'm Nancy Godrat. Today we're going to go over Chapter 2. The objectives of Chapter 2 are listed on this screen. And the first thing we want to go over is the definition of account and definition of debit and credit. So an account is basically a record of increases and decreases in any asset, liability, common stock, retained earnings, dividend, any types of revenue, and any expenses. So there are three ways we can show an account. And we're going to go over that in a second, but since we're here, we want to also tell you that in accounting, the definition of debit and credit is different from what we use in everyday language. I know you guys use your debit card, and every time you use a debit card, it reduces your cash. However, in accounting language, debit only means the left side of an account, and credit means the right side. So we have to retrain our brain to not forget debit doesn't mean reduction in cash, or credit doesn't mean a good thing or a bad thing, a positive or negative. Just means left and right. Now, as I mentioned, there are three forms you can keep track of an account. One is in a column format. We used this one in Chapter 1. We're not going to use it anymore. What companies actually use, they use a standard format, which is this one. Standard format of an account has 6 columns. A column for the date of the transaction, explanation for the transaction, a reference column, which I'll come to tell you later why we use it, a left column and a right column, so debit, credit, and a balance column. However, for educational purposes, we don't use a standard format. We want to teach you as fast as possible how to show the account. So for academia, we use a T account format. Why is it called T account? Because if you take a look at it, it reminds you of letter T of alphabet. So any account has at least a title and also a number, which is set by accountant, and a left side, which we call it debit side. It's abbreviated also by DR period, and credit side, which is abbreviated by CR period. So any account you look at, the left side is always called debit, the right side is credit. Now, the question is that how are we going to put the numbers from a column format into a T account and also later on in a standard format? So we have to come up with a convention, and accountants have come up with a convention that for any asset, doesn't matter what type, what asset it is, we're going to use the left side or debit side to show the increases, and the right side or credit side to show the decreases in that asset. So if that's the case, then I can say my $100,000, because it's positive, should be sitting on the left side or debit side, and the negative numbers or the decreases should be sitting on the credit side. So if I wanted to convert these 5 items, first of all, you need a date, like, January 1st, and we're gonna put that next to the number. And for the $2,000 also, we need a date. So the date comes first. This was January 5th, and so $2,000. Now, does it matter? We need if you're using a T account, you don't have to create one row for each amount because it's an informal way of showing your increases and decreases. Then you can basically you don't have to use one line per account, per amount. So in this case, the 5,000, which was on January 10th, shows up here. And then I have another 1,000 that happened on January 11th. I'm gonna put it here, and then eventually a negative, a reduction in cash on the 30th for the 2,500. Now, once you, on a T account, once you have all your numbers entered, you need to draw a line under both sides, the left and right side. And then since we know the numbers on the left for any assets are positive, we add them together. So 100,000 plus 106,000 on the left side, and we reduce it by the numbers on the credit side because we know numbers on the credit side for any asset are decreases. And therefore, we come up with the balance of 101,500. And we write down the balance on the side that is larger. Since the positive numbers were larger than the negative, the balance shows up on the increase side, the debit side. Actually, the side that increases an account is called normal balance. So normal balance is the side of the account that increases that account. So for assets, it's always the debit side is normal, meaning you always want to have an ending balance sitting on the debit side. If you put it on the credit side, either you made a mistake or something is wrong. So now let's see how do companies actually use their standard format account. In a standard format account, you're going to write down an explanation. Let's say the $100,000 was a contribution from owner. And then we put the 100K because it's an asset on the left side or debit side, and we arrive at a balance. So every entry in the standard format account, after that entry, you have to arrive at a balance because this way we would know what is, for example, the amount of cash that we have as of that date. I have these transaction memorized. Yeah, we purchased $2,000 of supplies and we paid cash. Now notice that in column format we were using negative when we were using our cash. However, in the T account or standard format, we will not use a negative number anymore. By the way, in accounting, any number in parentheses are considered negative. So in this case, we're not going to put negative 2,000 in here because by convention, we know that any number on the credit side of an asset is decreasing that asset. So in this case, we know that the balance on January 5th is 98,000. And let's say that we provided services on January 10th and we received $5,000 cash from the client. Therefore, the balance now would be the 98,000 plus the $5,000 or 103,000. And then eventually we received a deposit from a customer for $1,000 on January 11th. Again, therefore the balance of cash would be 104,000. And when we purchased computer, now the 2,500, because the convention is that for any asset, the reduction goes on the credit side, but we don't have to show it with a negative number, then the balance as of January 30th would be 101,500. So that's the difference between a column format account, a T account, which we just use it informally for demonstration purposes, for teaching purposes, and a standard format account that is used in formal record of companies. All the companies use a standard format account, which has 6 columns. Now, let's go over the next part of, so therefore we need to know the convention for other accounts. What is the convention for liabilities, for example? For liabilities, we have decided that we're going to use the credit side, the right side for increases when we owe money, and the left side for decreases. So whenever you owe money, you put the number on the credit side, and when you pay off the amount that you owed, you put it on the debit side. So if you look at assets and expenses and dividends, they have the same convention. The left side is used for increases, and the right side is used for decreases. Liabilities, common stock, retained earnings, and dividend and revenues have the same convention, meaning the credit column will show increases and debit column will show decreases. Now, if you want to remember this convention, you can say this acronym: after eating dinner, let's read comics. After eating dinner, let's read comics. After eating dinner, let's read comics. So what does that mean? That means if assets, expenses, and dividends are increased by debit, if you create a T account for yourself in here, so if this is your T, you will see that the debit side, which is the left side, will increase this type of account, whereas the liabilities and revenues and retained earnings and common stock are increased by a credit entry and therefore decreased by debit. So hopefully you will be able to remember this convention because it's really important. Otherwise, we're not going to be able to complete the rest of the following chapters, this chapter and following chapters. Now, there are 2 very important documents that we need to go over in chapter 2. One of them is called a general journal, and the other one is general ledger, and they are used in the recording process. So in a recording process, first we analyze transactions, then we journalize them, meaning put an entry in general journal, and then we post them to general ledger. In the next video, I will describe the recording process. If you have any questions, please let me know. Talk to you soon.